Guys, welcome back. Well, tonight's video, I obviously got to start off and say that, yes, I'm going to eat a little bit of humble pie after my video last night because I was obviously very bullish about what we saw in the memory sector, what we were seeing across the market. And I was, no doubt about it, declaring that we were leaving the bearish momentum and we were getting into a bull run. I actually still really believe that, and my conviction remains unchanged after what we saw today. But I got called out in the community last night because we started to see the tide turn in the after hours. We started to see the memory stocks pull back and give back some of the gains that we saw on Monday. But I was excited. What we saw for not only last week, what we saw on Monday was just unbelievable momentum. We see Micron was up, I think, 18% over the last over the last 6 trading sessions. We know SanDisk was up 35% last week, was up another 9% on Monday. So it was really exciting to see these stocks moving in the right direction. The demand, the fundamental signals, they're all still there in the market. That is why my conviction remains unchanged. But today, we just faced some macroeconomic headwinds that not only impacted the memory sector, it impacted the entire tech sector across the board. And I'm going to show you that in a moment because we saw high volatility, a reversal essentially across all of the tech sector today, where they pulled back pretty violently across the board. Every single stock that we track, whether it's memory, compute, connectivity, power, infrastructure, we're all down today. We saw capital rotate to essentially safe havens. They were moving into consumer goods, healthcare, other areas that got deemed as kind of less risky with the macroeconomic environment we have right now. The sad piece is that the rally that we were seeing with the tech sector, they were leaving a 21-day bear market. And it was actually the fastest recovery for the sector since March of 2020. But that momentum, frankly, just hit a wall today. The Philadelphia Semiconductor Index, it wiped out over $680 billion in one single session. It dropped by over 5%. The Round Hill DTF, that ETF was down by nearly 8% today. And the heavyweights that we follow on this channel were all significantly down. So let me just show you what I'm talking about. If I jump over here, these are my watch lists that I have on Market Watch. You can see the Fab 5 were all significantly down. We saw Micron down by 7%, SanDisk by 9%, Western Digital by over 7%, Seagate by over 9%, SK Hynix by over 9%. You get the picture there. They were all significantly down today. They all got impacted by the macroeconomic headwinds that we saw. But it wasn't just memory. I'll go quickly through all of my list and all the stocks that I track and follow. You can see here in kind of the power wall, all of the key power companies that are involved in the data center build out were all down today, red across the board, no matter how far I go down on my lists. If I look at the infrastructure build out, because we've been talking about that, I've been talking about Applied Materials. I still think it's an unbelievable entry point for that stock right now. But TSMC was down, ASML was down, Applied Materials down, KLA down, Lam Research down, Tokyo Electronic, Teradyne, all down. You get the picture here. The infrastructure players were down. The compute players were down across the board. NVIDIA was down by over 2%. AMD down, Intel, Broadcom, Qualcomm, and finally the connectivity players, just to round out all of the groups that I track to show you that this wasn't just isolated to the memory sector. It was across every single sector that is tied to the AI infrastructure build out. Today, we just got hit. We have a very crowded trade in general with these players. They've been getting a ton of attention, a ton of capital rotating them. They have been very hot sectors. We had a little bit of profit taking today, in addition to those macroeconomic headwinds that I'm going to get to in a moment. But just take a look at what it did to one of the hottest sectors that we've seen, this connectivity sector. Now, Lumentum pulled back down to 873, Coherent down to 306, Applied Optoelectronics down to about 131, Corning and Marvell were down. Some of these stocks may be an unbelievable entry points for you right now. You might be thinking, I love this, Kevin. We're going to buy the dip. Some of you might have some anxiety based on what we saw today. I just want you to know that my conviction, it hasn't changed at all. I still feel as strongly about all of these sectors and these stocks based on the demand that we see in the market, based on all the signals that we see in the market. So that's what I want to talk about in today's video. I want to go through kind of what halted the momentum with these stocks today. Let's talk about the underlying catalysts that we saw in the market that just essentially, like I said, halted the momentum that we've seen over the last 6, even beyond trading sessions for some of these sectors. And let's talk about why institutional investors, why they love these macro-driven pullbacks. They see them as entry opportunities for so many strong, fundamentally strong stocks that are in the market right now. And you may be looking at that way as well. So let's dive into the video. Let's get into what we're seeing in the market right now, what it means for the rest of the week. But if you haven't done it already, make sure you hit like and make sure you subscribe to the channel. Guys, as I always say, I want you to be part of Market Signal. I want to keep growing this channel. You have my commitment to put out data-driven insights and knowledge each and every day to hopefully make you a more informed and knowledgeable investor. And the only thing I ask in return is that you hit the subscribe button and join the channel. All right, let's get started. Let's start off with what we saw. And one of my beliefs is one of the biggest drivers for today's volatility was what you see on the screen, that the 30-year Treasury yield, it touched a 19-year high today as the U.S. debt approached 40 trillion overall. And just to show you what that means, I have it highlighted here. The recent surge, it lifted the 30-year Treasury yield above 5.3% at some point today. It was the highest we've seen this since 2007. And this comes amid a global bond sell-off and worries about stalled talks to end the war with Iran, fears of persistent inflation, and questions about monetary policy under the new Fed chairman, Kevin Warsh. And obviously also concerned about U.S. borrowing that now has the national debt poised to hit 40 trillion. I thought this article on investing.com called it out perfectly as well. And it says the tech sell-off weighs down Wall Street as bond yields climb. As we go to some of the data, it starts here, this first paragraph, where fading hopes for Middle East peace, it pushed oil prices higher, which in turn triggered an increase in the 30-year bond, the Treasury rate, to reach the highest level that we have seen since 2007. And the 10-year bond yield actually touched the highest level since we've seen of January of 2027. The author says it perfectly here. It's like domino effect that he calls out, that you see the talks break down. It leads to oil prices going up. We saw crude get up over about 92 a barrel today. And that leads to just higher inflationary expectations. And then the bond yields rise. So Burns McKinney, who's the portfolio manager at NFJ Investment Group, he added that every time bond yields rise, it disproportionately hits the tech sector overall. So for high beta stocks like a semiconductor and the memory equities the memory stocks that we follow on this channel, the rising yields that we see, they act as immediate gravity on the valuation multiples. So higher yields, they increase the discount rates used for equity validation models, and it lowers the present value estimates for future tech cash flows. And we also see analysts, they note that the rising energy costs that we see in the market right now and the elevated rates that will be needed for funding kind of future expenses for the AI hyperscalers, these are leading short-term traders to question whether the multi-trillion-dollar infrastructure buildouts could face temporary pacing delays. And that had an impact on the stocks today too. So we just have this fear in the market that we're going to have a slowdown in the build-out in addition to all the other macroeconomic headwinds that we see. And it just caused a pullback across the entire board like we saw. And if I scroll down further, they called it out that the S&P 500 biggest drag is from individual stocks. It's the chip companies overall. It's NVIDIA that was down by over 2% today. Micron fell over 7% after rising 18% in the prior 5 sessions. And the other stocks that were hit hard today were SanDisk and Western Digital. I showed you those earlier. Seagate was hit hard today. The SK Hynix ADR was hit hard today. And the Round Hill, that DRAM ETF, was definitely hit hard today after having 5 straight gains. There's nothing that can crack a momentum rally like interest rates moving higher. And we clearly got evidence of that today. And the biggest catalyst that we have coming in our favor next week is the NVIDIA quarterly earnings. So the author calls it out here that this quarterly earnings report is the next big test for the AI-driven momentum. So that's kind of what we saw in a nutshell today. Is what it kind of caused the pullback, what caused the worry, the anxiety with the tech sector. What we saw, this shift of capital, and it's so disappointing because we were set up for such a strong week. We're set up to see, Micron continue to move, SanDisk continue to move. I think it's a healthy pullback. I think we'll work through it. Honestly, I think these stocks will get back into a bullish momentum because that is what we're seeing in the market. And I pull up this article from UBS because they basically reiterate their confidence in Micron. And they're kind of talking about their bullish position for the stock as well. And it says UBS reiterates Micron stock rating on AI memory demand outlook. And if we walk through some of it, they reiterated the buy rating for Micron in light of everything that was happening today. They're still showing strong confidence in the stock. They reiterated their price target of $16.25. And the interesting piece here from Timothy Acuria, their analyst at UBS, he was talking about investor meetings that he recently had. And he said, investors asked about supply chain agreements and whether they will hold up, downside to gross margins, sustainability of current supply tightness, and the amount of capacity set to come online for the next few years. He said these were the questions he was getting peppered with. That shows you a little bit of kind of the anxiety, I think, the type of sentiment that we have with our investors right now. Like I said, there is this constant worry that we're going to have the rug pulled out from us in this memory sector. And it's hard to grasp our heads around that the sector has fundamentally changed, that we are structurally in a different cycle than we've ever been in the past. And that's hard for many of us to have faith in and to believe in and have this long-term view in. And that's what he was seeing with his investor questions that he had. And he said, Micron will probably remain a battleground in the near term as short-term investors remain turned off by peaking gross margins as more volume moves inside of supply chain agreements struck at pricing from 1 or 2 quarters ago. But he said longer-term investors will see memory as capturing much more sustained value as the economics of AI token generation will be fundamentally more determined by memory than compute. And in recent news, he said that Micron technology has been the focus of several analyst firms and legal actions. That legal action is Netlist that I called out earlier. And it says Bank of America Securities reiterated the buy rating for Micron as well, highlighting a shift in the memory industry that could lead to more durable earning power with the potential of reaching earnings per share exceeding 230 a share. So UBS, they maintain their 625. They also call out below Think Equity. It raised its price target to Micron to 900. So they were, I think, $60, and then they went to 900, which is kind of a wild price target overall. But I just wanted to show you that because in light of everything that we're seeing, we're still seeing strong conviction across the board. And remember I said that institutional investors, they love these types of macroeconomic pullbacks because it just drives strong entry points overall. Now, this article came from Jim Cramer, and I'm not the biggest fan of Jim Cramer. You may love him, you may hate him, but I wanted to share it with you because I think it just shows some of the sentiment and thinking that is out there. And Jim Cramer on his show said on CNBC today, he said that Tuesday, persistent market pessimism is creating opportunities for investors who can tolerate more near-term volatility. He called out the 30-year Treasury yield and how it hit 5.33 today. It's the highest level in 2 decades. That Brent oil topped $90 a barrel. So all these macroeconomic headwinds that I've talked about. He also said that he sees the opportunity in technology, citing a record number of short bets on the NASDAQ 100. And he says he wants to gradually buy beaten down data center stocks. He highlighted Micron in that group, which Cramer's charitable trust recently bought amid the strong demand for memory used in the AI infrastructure. So like I said, whether you love Cramer or you hate him, I'm personally not the biggest fan overall. You may be, but I think the opportunity I wanted to call out is that there are going to be tremendous opportunities for each and every one of us as investors right now with what we're seeing in the market. If it pulls back again tomorrow, if we see more macroeconomic kind of news hitting this sector, causing more volatility, overall just could create even stronger entry positions for us. So make sure you do your own due diligence on that, do your own research, make sure it fits your risk tolerance if it's something that you're going to look at for your individual portfolio. But in reality, guys, these macroeconomic headwinds, like we saw today, the spike in bond yields or the kind of temporary energy supply shock, they drive down top tier semiconductor names like Micron, like Broadcom, like Lumentum and Coherent. And the smart money institutions, they rarely panic when they see these types of movement in the market. Instead, they use these macro-induced dislocations as classic accumulation windows or opportunities for their funds. It's not a structural breakdown in the AI memory demand. The physical reality in the ground just hasn't changed at all, especially from yesterday when we were so bullish, or at least I was so bullish overall. We still continue to see high bandwidth memory, enterprise DRAM, ultra high density NAND. remains severely supply constrained across the entire hardware ecosystem. So for long-term investors like myself that are focused on multi-year AI infrastructure build out, a macro sell-off decoupled that decouples stock price from the underlying company fundamentals, when you see something like that, it is such an opportunity window overall. So I think for all of the investors out there today, I think the piece that we saw today was 24 hours ago. I was incredibly bullish. I'm still very bullish overall, but I think the price action we saw in the market was incredibly bullish for Micron when it got up over 1,000 a share. You know, we saw SanDisk pushing above 1,800 a share overall. Today, Micron lost 7% and SanDisk lost 9%. Neither day by itself proves the long-term thesis of the memory sector. But yesterday showed us just how powerful the momentum can become when capital quickly rushes into a supply-constrained sector or market like the memory sector. And today reminded us just how quickly high beta stocks can reprice when yields rise and positioning becomes extremely crowded in the trade. So tomorrow, I'm not going to be looking at Micron just to see if it's green or red. Instead, I'm going to be looking for signals in the market to see if it can tell me if anything has actually changed in the physical memory market. So I'll be asking questions like, did HBM demand change? Did customer commitments change? Did DRAM pricing change? And finally, did the hyperscaler CapEx change overall? And if the answer remains no to those questions, which I believe it does, then it shows us today's move was primarily driven by valuation and a positioning reset. If those signals begin breaking, or if some of those questions, if the answer is actually not a no and it's a yes and we're seeing changes, then we need to reassess the entire thesis. But I don't think that's what's happening in today's market. And clearly, in my opinion, that is the difference between following price and following the true signals in the market. Today was clearly, in my opinion, a macro-driven de-risking event that was exacerbated by a lot of things that are happening in the environment. But the underlying demand for the memory cycle or for the memory players, it remains fully intact. So guys, thanks for watching Market Signal. Drop a comment below. Let me know what your take was on today's actions. What do you think drove it? Are you concerned? Do you think it's a great buying opportunity overall? But let me know your thoughts on how you're looking at it right now. And if you haven't done it, also make sure you hit like and make sure you subscribe to the channel. Have a great night, and I'll see you after the closing bell tomorrow.